What's up guys, it's Nathan here. In today's video, we'll examine Westpac's forecast for the Australian economy, the impact of the global banking system development, and the factors driving the deterioration in growth rate. Finally, we'll explore the Reserve Bank of Australia's tightening bias and the latest data. Now let's dive into details of the Westpac-Melbourne Institute leading index growth rate, Westpac's forecast for the Australian economy, and the implications of the global banking system on Australia's growth prospects. The 6-month annualized growth rate in the Westpac-Melbourne Institute Index predicts the pace of economic activity relative to the trend 3 to 9 months in the future has risen slightly to negative 0.94% in February from 1.04% negative in January. This marks the 7th consecutive month of negative growth, pointing to a below trend growth for 2023. Westpac forecasts that the Australian economy will only grow by 1% in 2023, with weakness extending to 2024, which is also expected to show a second consecutive year below trend growth at around 1.5%. The slowdown has been attributed to rising interest rates, a deep shock in real wages, and a bottoming out of the savings rate and falling property values. The recent developments in the global banking system isn't expected to significantly impact Australia's financial system, but there will be headwind for major advanced economies, particularly through reduced credit availability and the knock-on confidence. This will indirectly impact Australia's growth prospects. The leading index for growth has seen a sharp downturn from plus 0.75% July last year to its current state, which is negative 0.94%. The main components driving for the deterioration include a slowdown in aggregate hours worked, falling commodity prices in AUD terms, a downturn in US industrial production, and a softening in consumer expectations for unemployment. Additional drags come from narrowing yield spread and softening in dwelling approvals. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel, and a big thank you to all our subscribers for your support. Inspires us to create more content. We hope you enjoy. The Reserve Bank of Australia's next board meeting is on the 4th of April, and Westpac expects the board to pause the tightening cycle for the first time since it began raising rates last year in May. The decision is likely influenced by softer than expected prints for economic activity, monthly inflation, and wage growth, as well as caution around developments in the global financial markets. Well, if there is a pause in April, it isn't expected to mark the end of tightening cycle, with new information available for the May board meeting, particularly around inflation, and staff's revised economic forecast is expected to indicate the need for another final 0.25% increase in the cash rate, making it the end of the tightening cycle. The Reserve Bank of Australia hinted that the board would like to pause the tightening cycle in April if upcoming retail trade and inflation data shows that demand has significantly cooled down in the economy. The recent turbulence of global financial markets due to the failure of Silicon Valley Bank is likely to be a secondary consideration for the board, given the well-regulated and capitalized Australian banking system. The Reserve Bank will closely monitor several data releases over the next 2 weeks, including February's retail sales and monthly CPI indicators. These releases will help determine whether the Reserve Bank will leave the policy on hold or increase a further 25 basis points in April. Despite the possibility of a pause, the Reserve Bank of Australia still has a tightening bias, as confirmed by the March board minutes. The Reserve Bank of Australia expects that further tightening will be required to ensure that inflation returns to target range, and the current period of high inflation is only temporary. However, a pause would allow the Reserve Bank of Australia to reassess the economic outlook before it makes further decisions. And remember to like, share, and subscribe to stay informed with the latest property and finance news. Two key data releases, the February NAB Business Survey and the February Labour Force Survey, have already been published, with the robust NAB Business Survey and the dip in the unemployment rate to 3.5% would lend weight to another rate increase at April's meeting. However, retail trade in February is expected to post a small decline, and the February monthly CPI indicator might show signs that inflation pressures are starting to dissipate. The RBA board would likely consider this data to justify a pause in April. At this stage, it's a coin toss whether the Reserve Bank leaves the cash rate on hold in April, with the final call to be made once retail trade and monthly CPI data are published. The minutes of the last meeting also referred to the wages data, which pointed to a solid growth in the March quarter based on timelier measures like newly lodged enterprise agreements and the estimate derived by CBA for its banking data. While the annual rate of wages growth has continued to lift, currently around 3.6%, the level remains consistent within target inflation. The Australian economy faces challenges as the Westpac-Melbourne Institute leading index growth rate continues to show negative print, suggesting below trend growth for 2023 and extending all the way in 2024. The Reserve Bank's decision on whether to pause or continue the tightening cycle will be influenced by upcoming data releases, including retail trade and CPI. Despite the possibility of a pause, the Reserve Bank maintains a tightening bias, with the ultimate goal to bringing inflation back within their target range. The Reserve Bank's decision in the coming months will significantly impact the economy's trajectory as well as financial market performance. Did you know here at Hunter Galloway, we're a mortgage broker that helps first homeowners, investors, and even refinances with their mortgage needs? Feel free to get in touch with us. There's no cost for our service, and you can reach us at huntergalloway.com.au, where you can fill in the free assessment form or call us directly on 1300 088 065, and we'll see you next time.